Paragraph 54 of IAS 1 suggests several line items to be included on the face of the statement of financial position. Additional line items, headings and subtotals may be needed to fairly present the entity's financial position. Further subclassifications of line items presented is made either in the statement or in the notes, for example, classes of property, plant and equipment. Caryn assets are assets that are expected to be realized in the entity's normal operating cycle, held primarily for the purpose of trading, expected to be realized within 12 months after the reporting period, cash and cash equivalents. All other assets are non-current assets. The normal operating cycle is the time taken from acquisition of the assets to receipt of the cash from sale. If this is not clearly identifiable, it is considered to be 12 months. The statement of financial position includes components of equity. These are contributed equity, accumulated balances of classes of other comprehensive income, and retained earnings. Current liabilities are those expected to be settled within the entity's normal operating cycle, held for purpose of trading, due to be settled within 12 months, and for which the entity does not have an unconditional right to defer settlement beyond 12 months. Current portions of non-current assets or liabilities are included as current assets or liabilities when the payment or receipt of the amounts falls within 12 months following the end of the reporting date, even if the original term was for a period longer than 12 months. When a long-term debt is expected to be refinanced under an existing loan facility and the entity has discretion to do so, the debt is classified as non-current, even if the liability would otherwise be due within 12 months. If a liability has become payable on demand because an entity has breached an undertaking under a long-term loan agreement on or before the reporting date, the liability is current, even if the lender has agreed after the reporting date and before the authorization of the financial statements for issue not to demand payment as a consequence of the breach. However, the liability is classified as non-current if the lender agreed by the reporting date to provide a period of grace ending at least 12 months after the end of the reporting period, within which the entity can rectify the breach and during which the lender cannot demand immediate repayment.